All right, so over the last month, I've transferred over $20,000 into my brokerage account. And over the next year, I'm going to try to add $10,000 to this amount. So my total will be $30,000. And this is going to represent, of course, a 50% return on investment. And how am I going to do that? I will be trading weekly options on Alphabet stock. I will start to make a trade near the beginning of the week. I will set the expiration date on the Friday of the same week. So I call this the weekly options challenge with Alphabet stock. And the reason I'm doing this is because I want to try to figure out if it's even possible to make a 50% return on your money and do it consistently year over year. Because if it works out that I can make this happen this year, then maybe next year I'll do this with $100,000 and then I'll be able to make 50,000 off of that. I mean, technically, we already know it's possible because the Medallion Fund, which is managed by Renaissance Technologies, is often credited as having the best performance on Wall Street. From 1988 to 2018, it produced an annualized return of 66%. And if a hedge fund can make 66%, then maybe I can do at least 50. I don't know. Passive index investors tend to say that your portfolio is like a bar of soap. The less you touch it, the better, because the more you touch it, the smaller it's going to get. But others say actively managing your investments to take advantage of timely opportunities is how you can beat the market. So that's what this challenge is going to help me figure out. And I've chosen to use Alphabet because I know the company quite well. And here are the ways I can make money from trading options. These are basically all the ways that I can get to my 50%. So I can earn premiums from puts, and it will be mostly cash secured puts. And of course, the cash will be the $20,000 that I'm starting with. I can also make premiums from call options. They could be naked calls, covered calls, call spreads, anything like that. But I'm basically trying to take advantage of time decay. And then the third way is through capital appreciation. So if I sell a put and I get assigned the stock, and then later on I sell a call and it gets called away at a higher price, then of course I make the difference between the price I sold it at and the price that I got in at. Now, of course, you can't expect to make a 50% return on your investment without taking on some serious risks. So, some ways that I can lose money is with capital loss. That's if I buy high and sell low. And I can also get wiped out if one of my option trades go really bad. So, basically, the challenge will end when I either make my $10,000 or I lose $10,000. Because if I'm starting out with 20,000 and I lose 10,000, then clearly I'm not cut out to do this and I'm just going to cut my losses and stop there. And just to give you an idea of how one wrong move can basically blow up this whole experiment, let's say on a Monday I sell 5 call options and the strike price I choose is 120. But then Google reports its latest financials and it's so unexpectedly good that the stock shoots up, and by the end of the week, it actually closes at $140 per share, which makes my options really deep in the money. So what I basically have to do is buy the shares at 140 and then sell them to the call option holder for 120, which means I'll be losing $20 per contract, and I have 5 call options, and each option represents 100 shares. So I'm just going to lose $10,000 right there. So you can see how risky options can be. And this is often the case when you hear about beginner option traders blowing up their accounts. You really have to be careful with how you allocate your capital and know what you're doing. I think this will be a pretty fun challenge. Feel free to follow along as I release a new video update each week. And I'll summarize basically my new trades and review how my previous trades did in the prior week. I'll track everything in a graph so you'll be able to view my progress over time. And 1 year from now, I'll either have $10,000 more from this challenge, or I would have failed and I would have lost $10,000. One of the two. Only time will tell, so let's see what happens. And let's get started with the current week's trade. All right, so today is July the 18th, and pretty excited to start my options trading on Alphabet. So the goal is to make $10,000 for over the next 12 months. So I'm going to try to make about $200 per week. So looking at the markets, it's been open for roughly 1 hour now. The S&P 500 is up 0.68, Nasdaq is up 0.85, and these are relevant indexes because Alphabet, I believe, is in both of these indexes. So if we take a look at the stock, I'm going to use GOOGL because for some reason there's slightly higher implied volatility IV on this ticker than on just GOOG. But I think it doesn't really matter too much. If I zoom out to maybe like 3 months, what I'm looking for technical analysis is just looking at the chart and seeing if there's any pattern. And right now there does seem to be a pattern. You can see there is sort of this range going on here over the last, this would be from May until now. So over the last couple of months, you can see it's gone up for about a week and then down a week and then up a week and then down a week and then up a week and down a week. So right now it kind of looks like we are going back up, even though today is starting out negative. But by the end of this week, because my expiration date will be the 22nd, I would probably expect the range of the stock to be somewhere between like a 109 and a 120, so somewhere around there. So what I'm going to do with my options is pick a put option that I'm going to sell, and I'm going to choose a low bound for that I don't think the stock is going to fall through, and I'll also sell a call option at a higher bound, maybe like 121 or something, and that would be a covered call because I currently have 100 shares of Alphabet. So let's see how much money I can make from that. I'm going to jump into IB here. Let's take a look at the option chain for Alphabet and just refresh this here. So July 22nd, which is 4 days away, I'm going to turn on Strategy Builder. So this allows me to write a put option and also a call option at the same time. So I'm going to look on the put sides here on the right, and it's at 111 right now. So maybe I'll go like 108 because I don't mind owning the stock at 108. I think that is a very fair price to pay for this company. If I hover over the bid, I can click there. And if I go down here on the call side, maybe a 120, sell that one. So overall, I am going to make, looks like around 95 cents. And if I look at the profile, which kind of shows me the probability of profit, this is what the profit and loss graph would look like. There's a 76% chance that I will make money from this trade. Okay, so I am going to put this trade through, submit order, and just looking at what this entails. So basically $95, and I will be using up a margin of $39.73. So this is how much collateral I would have to place. Maybe what I will do is instead of one quantity, I'm gonna sell 2 of these. So I'm gonna make $187, but I will use up $8,000 of my initial deposit. So submit that, and let's see if this goes through. I can see the option has become cheaper now, this short strangle, so I'm going to choose the 90, which is the mid.
Order filled.
Okay, so it filled at 90. And if I look at my trades here, yeah, so thanks for joining me today. I will give an update next week and probably put on a new trade. So until then.